Hello, folks. Welcome to Pro Trader Strategies Market Commentary for Friday, February the 19th. I'm Eric Wilkinson, and some of you guys may recognize me as the Wolfman from, this guy, from mainstream media, where I used to talk about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. I'm going to do the same thing for you folks in these daily market commentaries, but I'm going to go a little bit further and talk about these option strategies I'm implementing into my portfolio based on the assumptions I come up with from that economic, geopolitical, and market analysis. And for you folks, I've streamlined the process for you guys to find the optimal option strategy for any situation. If you have a directional assumption, we look at what's going on around that underlying and find the best option strategy following our roadmap to trading options. So check that out. As this floor trader has traded all across just about every market in about all market conditions, I also help design some option contracts for the Chicago Board of Trade. So check that out. Check out my videos on trading options. And without further ado, let's get on with the economic data and see how that's impacting the overall markets, because we have a lot to go over. It's actually one of my favorite days for economic data. Why? Because we get the flash PMI numbers out of Europe. Now, that's the most important economic data point as far as I'm concerned, because it's forward looking. So let's get on with it. We've got a lot to go over. We got retail sales coming in at negative 8.2% out of Great Britain. French final CPI consumer price index numbers coming in at 0.2%. That's in line with expectations there. And then we got the flash numbers. So let's get on with it. French flash services PMI coming in at 43.6, expected to be 47.0. One thing to go over real quickly, well, PMI numbers, Purchasing Managers Index. It's forward looking because they are seeing the inputs, right? Anything above 50 is expansion. Anything below 50 is contraction. Europe, France, and Germany are the major manufacturing sectors of the European region. So keep that in mind as we go through these. And we got the French flash manufacturing PMI 55, expected to be 51, so expansion and beating the number there. Germany flash manufacturing PMI 60.6, expected to be 56.6. The German flash services PMI 45.9, expected to be 46.5. Then greater European region outside of Germany and France. That's the bigger parts of that economy, right? So that's why they split those off. But the rest of the crew is coming in with a flash manufacturing PMI of 57.7, expected to be 54.6, so better than expected there. Again, though, the services sector PMI for the flash estimates coming in at 44.7, expected to be 45.9. So we're seeing all of the service numbers miss and come in below 50. Manufacturing beating the estimates and coming in above 50, showing expansion. Great Britain services PMI for the flash estimates coming in just slightly shy of 50 at 49.7, expected to be 42.1, so better on that number there. Manufacturing, again beating at 54.9, expected to be 53.1. Then we also got the, here in the United States, our own flash manufacturing PMI numbers. Now remember, we really like to look at the Institute for Supply Management, but it came in at 58.5, expected to be 58.4, so in line with expectations, and we are more of a service sector, so let's look at that one. The flash services PMI coming in at 58.9, expected to be 57.9. And we have existing home sales, again beating at 6,690,000, 6,690,000, expected to be 6,590,000. So beating the street by 100,000 there on the sales. Home prices continue to go up. $1 million+ homes, knocking it out of the park. Inventory is staying and turning over at a higher rate than we've even seen previously, which is still at record levels. All right, enough about the rand herds around the world and the moral hazard. Well, actually, there is something about the moral hazard. All of that was about me talking about the moral hazard of allowing people out of some of these home loans back on the financial crisis. Well, we're back at that again, right? Well, now Biden's talking about forgiveness of loans on student debt. Well, how is that going to affect everybody else who paid off their student debts? Are they going to get a reimbursement from paying that off? Well, probably not. And that will create a moral hazard. If you're going to bail somebody out for having debt, what's going to stop everybody else from stopping and paying off student loans that they actually could possibly, all right? So that creates that same moral hazard that we talked about 12 years ago in the rant. All right, without further ado, let's get on with crude oil prices because gasoline prices at the pump have been going through the roof. Almost $3 here around me. I think I've been seeing about $2.80. So that's coming up from cracking below $2, not just too far ago, it doesn't seem like. But we are out of that $60 a barrel area, so hopefully we have found a top here and start coming back down to the mid to lower 50s. I would even like to see it go lower, obviously, because I've talked about velocity money and spending them elsewhere in the economy. We're seeing the production woes and everything else. We talked about all that stuff in the crude oil yesterday in the daily market commentary, so I'm not going to really beat that up too much. Bitcoin, I've just got to keep an eye on it because it continues to move higher at $1,000 clicks. We're at 55,000 as a high today and just shy of that. And $200 shy of that right now, which can be made up in a matter of seconds in Bitcoin. Just amazing moves. All right. Gold futures starting to make a move to the upside, up $7. We need to get above this little line in the sand that I've thrown in there. That showed support and resistance, so I think that we're going to get above that today, hopefully, and then start resuming our march back to the 1800 area. Bonds, down a point again today. Just the market continues to go down. 10-year note yields 1.33, I think. That's one of the higher yields that we've seen in over probably a year now. VIX is coming off, and that's a bit of a mixed bag here. We got the Dow Jones Industrial Average moving up into positive territory. Not quite making all-time highs. It's probably very close to it. Remember, a lot of our all-time highs here in the Dow Jones have been made overnight. VIX trying to peel back above this 9-day simple moving average. Yesterday's rally into the close, basically, after I got done with the daily market commentary, the market just unabated rally to the upside. Did not give us a look of a topping pattern here. As a matter of fact, it looks like we've just taken a breather and the market wants to resume the march to the upside. So the upside is still in play now with yesterday's late day rally, and we can see the E-mini S&P is up 10 points on the day. And this is where I was talking about. As soon as I basically got done with my daily market commentary, the market just spiked. They must have watched it or something. It said it might be a good time to put on some negative deltas or some protection in your portfolio. But you can see overnight very strong again. And today it's kind of quieting down already. All right, nothing really to talk about here. I don't know why I threw PENN up there other than the fact that I wanted to talk about Deere just because I'm a big Deere fan, and they knocked it out of the park on earnings, up 10% on the day. I did not play this for earnings. I had that starred on my calendar, but yesterday is my webinar day where we talk about these option strategies and how to find the right option strategy for any given assumption. Well, I got a little bit tied up with that and kind of forgot about the earnings for a moment, and the bell went off and it was ready to hit my webinar. So didn't get around to it, unfortunately, but I would have played this to the upside. All right, and that's it. That's all I got for you guys. I hope everybody has a great weekend. Please take a moment to go over our disclaimer, as we are an educational company. Folks, I'm not trying to get you guys to jump off the cliff with me while I'm doing these trades. What I want you to do is learn from what I'm doing and implement it in your own way into your portfolio based on your assumptions, okay? That's all I got for you guys. Have a great weekend, and if you can't take that, take it easy.